This is my first Bitcoin conference, and I could not be more excited to be here. Last night was a bit like Christmas Eve. I just couldn't sleep. And like my kids, I was counting the days down, like 3 sleeps to go, 2 sleeps to go. Look, as is the case with any new discovery or invention, is Bitcoin a discovery or an invention? That's a whole other topic. There's a whole bunch of challenges for early adopters, and that's definitely the case here with Bitcoin. It's often been remarked that to get your head around this thing, you have to go down a whole bunch of rabbit holes: cryptography, history, economics, computer science, you name it. And I think for anyone who's intellectually curious, it's a completely rewarding and worthwhile kind of thing to do. What you also realize is that there are a lot of dead ends when you start doing this kind of deep research. And one of those dead ends, we are going to argue here today, is crypto, aka altcoins, aka shitcoins, aka a total waste of your time. These are projects, and look, these are big statements, right? And I think you could go to any kind of crypto conference and there'll be people there representing their project and they'll make the same thing. So we're going to try and back this up with some really rigorous thinking and reasoning. But essentially, just to define things, these are projects that purport to use the same technology, but for optimized for different things. Maybe they're larger blocks, faster transactions, bigger volumes, smart contracts. These kinds of things, and I think it's fair to say, actually sound pretty plausible. Who here has been lured by the dark side? Who here's got a shitcoin? Or 2? We all do, right? And I think you can find the most hardcore maxi, and that is true of them as well. And it's a very, I think it's a very understandable kind of standpoint. If you're in technology, the one thing that you tend to see again and again is that it just gets disrupted. Better versions come along. MySpace was the dominant social platform right until it wasn't. Right? And so it's natural to think, well, here's another computer-based technology. The same kind of thing is going to happen. But of course, you work out that no, as the point has just been made at the previous panel, there is something unique here, and there is something that's special about Bitcoin. But the other thing that you realize is not only are these other projects fundamentally flawed, but the more pernicious part of it is that they're a grift, they're a scam. It's not just like, no, this is a better technology. This is outright evil, this other kind of stuff. And again, we're going to try and make this point. The problem with it is that Bitcoin gets tainted with all of this kind of stuff. People throw mud where mud needs to be thrown, but it sticks on us as well, so it's incredibly frustrating. So we're guilty by association in the eyes of many, and we're going to set the record straight today, and we've got some incredibly big brains in the room to help us do exactly that. So JP, I'm going to start with you, and I'm going to start with a big one. What distinguishes Bitcoin from shitcoins?
Thank you for that. Well, as many of you know, this is somewhat of a hobby horse of mine. It has been for quite a while. I obviously have the same frustrations in terms of we have this amazing thing that was gifted to the world, and then all of a sudden, well, in fact, I can tell you when it occurred. Well, it was relatively early in the piece, and even Satoshi himself, when he spoke on the early Bitcoin talk message boards, preempted the fact that we've got this thing. It's the invention of digital scarcity, first of all, is one of the ways in which you could describe Bitcoin. And of course, what does that mean? What does digital scarcity mean? Well, we're all familiar with the idea that if you have data, if you have a file on a traditional type of computing system, then that can be copied. So how can you have money if you can just copy it? So you have to have you have to have some way of you have to have it so that it can be scarce, a digital scarcity. And it turns out that's a very, very difficult problem to solve. In fact, it was a problem that many people, even people that were versed in the computer science of all of this, felt that was an intractable problem. But Satoshi not only put out a white paper saying, I have solved the problem, but he also immediately released the software proving it. And it was very quickly, well, not very quickly, but it was rather slowly, adopted by the first follower, Hal Finney, and then others who continued to run the software. But as digital scarcity, if there is to be this idea of digital scarcity in the world, then by definition it can only be invented once. So it's very important that we do look upon Bitcoin as a separate phenomenon to crypto, because there can be 1 million follow-ups. You can have 1 million copycats. There's no limit to the number of copycat iterations, maybe making some trivial alteration to the code or adding some new bell and whistle. There's no limit to the number of those you can have. And if you accept that all of these things are equal, they're not equal on any level, but even if you were to accept that point, then you don't have digital scarcity anymore, in which case you have nothing. So if you are to get involved in this phenomenon and use this as your money, there's only one bet that can win, and that is a bet that is the bet that there is if there is such a thing as digital scarcity, and that's Bitcoin. Now, there's another distinction I want to make. There's obviously the idea of shitcoins. That's just simply third parties coming along and essentially printing their own money. Now, Bitcoin had no pre-mine. What do I mean by that? Well, it is a bunch of coins that are essentially created out of nothing by the originators of the token, which they then keep for themselves and then dump on the mug punter, the traders and the general public who think that they were too late to get in on Bitcoin, so now I can go and buy this next thing that seems cheap, but it isn't cheap. It's just a unit bias. But the idea here is that these people think that they're going to get in early on something else, but the founders, and Ethereum, which is the second largest cryptocurrency, Bitcoin is a cryptocurrency in the same way human beings are technically animals, but that had a 70% pre-mine. 70% of that existed, was created by the founders, which they then sold to the public. It's essentially a security.
And they've changed. They've changed the protocol.
Well, they have changed the protocol. They have a different narrative I don't want to go pick too much upon one. We're here more to talk about the positives of Bitcoin rather than negatives of other things so much. But it is, I think, a necessary example to bring up because it is very prevalent. So many people have gotten caught up with not just that, but other distractions. And so there's obviously other cryptocurrencies as well that are attempting just to be simply money. Again, these are just copies. They always have their narratives as to why Bitcoin is deficient in one or another to justify their existence. The big deficiency they often harp on about is scalability and transaction volume, but of course, and they pretend as though the Lightning Network doesn't exist to justify that. But the other broad category of thing is this idea of blockchain. Just interested from the audience, if I asked you when blockchain was invented, when do you think blockchain was invented? Do you think it was invented who thinks blockchain as a concept was invented, say, 10 years ago, 14 years ago when Bitcoin was invented? Yeah, how long ago? Yeah, you probably know the answer, Lloyd. But so shout out from the crowd. How long ago does most people think that blockchain? 20 years. That's right. Yeah, because obviously this is a much better informed room than the general public. But this idea is that people think that blockchain was just somehow was invented with Bitcoin. There's this what the blockchain crowd has had is and I remember they came into, they sort of started off joining the Bitcoin community that's where they sort of got involved with people that were already interested in this stuff. And this was even in the media. They had this narrative saying, well, we don't need that pesky currency of Bitcoin, but the underlying technology under Bitcoin, that's what's interesting. And so they said it's the Bitcoin technology that underlies Bitcoin, as though, okay, well, if that's true, well, it turns out that, as most of you are already aware, blockchain, the concept of that data structure, was invented, well, rather developed, or was it discovered? That's another question later on, in a paper by a couple of academics, Harbour and Stornetta, in 1992. So if that's the underlying technology that's important, why wasn't anyone doing anything with it then between 1992 and the discovery of Bitcoin in 2008? So again, you can't just take that out and have it be useful. Otherwise, people would have been using it before. I'm going to stop you on the blockchain part because that's exactly what I wanted to direct over to you, Ben. And I get that all the time. It's like, I'm not really that into Bitcoin, but blockchain's got a lot of potential. And there's a really great article called "You Can't Have Bananas on the Blockchain" or something like that by Gigi. Ben, expand on that for us. Why can't I track my logistic network on a blockchain? Why can't I do what the ASX tried to do and blow up $90 million and put my registrations on the blockchain? Why does blockchain only have one use, and why is that use Bitcoin?
Sure. Well, I'll just quickly introduce myself. The founder of PayBTC, Australia's non-custodial Bitcoin-only exchange. And I run Bitcoin Brisbane, which is a great meetup. We've been doing it for about 2 years, up in Brisbane once a month. But to answer the question, the thing with blockchain, it's simply just a slow database, or nothing but a slow database designed to do one thing, to ensure Bitcoin transactions cannot be double spent. That's essentially all it's really made for, or useful for. Otherwise, in a centralized manner, if you try and use it, it's just a slow application that is unnecessarily slow for no reason. The whole point is to be decentralized and slow and doesn't change. That's what money should be, not applications. So that's something key to understand. The trouble, and you said Bitcoin, a blockchain was an invention. I think it's more a discovery, Bitcoin, sorry, is a discovery. Absolute digital scarcity, rather, was a discovery, rather than an invention, because the very thing discovered was resistance to replicability itself. I think Canute mentioned that one. And once you realize that blockchain only has one purpose, to secure Bitcoin. So trying to use it as a buzzword, and people are essentially ripping off the success of Bitcoin in order to enrich themselves. That's what blockchain really is. Bitcoin is not that.
I'm old enough to remember the .com bubble and bust.
Yeah.
And back in the day, I was working as an equities dealer, and then the internet came along, and it was a thing. A lot of people didn't think it was going to be a thing, but it was a thing as it turned out. And a lot of companies very quickly worked out that all you needed to do was add .com to your name, and then your share price would double, right? Yeah. And blockchain, I think, is that
it's Web 3 now?
Web 5 maybe. And the other thing I think, Ben, it's worth expanding on is there's a trouble with putting things on the blockchain, because logically you still need someone to administer it. If I put property registrations on the blockchain, right? So okay, I've got a record of it, but I still need one thing exists in the digital realm, the other exists in the physical realm. There has to be, essentially, the Lands and Titles Office has to still say, yes, this is our record, but we still need
that guy to run the database.
Yeah. Which is far, far superior. Whereas with Bitcoin, it is what they say, digitally native. It exists only there, and it exists nowhere else. JP, sorry, Nick, I want to go to you next. And this is, maybe you could riff a little bit on the Blockchain Trilemma. This is a bit of work from Jeff Booth, I believe, and if you haven't read the article, you really should. But it sort of talks about what Bitcoin is optimized for and what sacrifices are made in optimizing for different things. Do you want to run with that?
Yeah, sure. So the blockchain, I'll introduce myself. So I'm Nick, a Bitcoin engineer from Melbourne. I made a payment processor called SatSale, and now I'm working on next generation multisig, so come see my talk later. So the blockchain trilemma is this idea that there are sort of three main properties of a blockchain which are important. So decentralization, security, and now I've forgotten the last one. Scalability, that's it. There we go, crowd helper. So other blockchains, they always make really bad trade-offs with these properties of a blockchain. And the way that they do this is they often do it, they obfuscate the problems that they have with them. So, for example, decentralization is often the most common one. They their blockchain is much, much less decentralized, but they use like technical jargon to sort of hide the fact that the blockchain is much less decentralized than it probably should be. So it might be run by a single company, or the tech might be built in a way that it's very hard for individual users to run and to maintain their own copies of the software, like running a node. If anyone's ever tried to run an Ethereum node or a Solana node or any of those, good luck. Whereas a lot of us in this room are running Bitcoin nodes at home. We're sort of a part of the
How
Bitcoin.
many do?
Yeah,
How many Bitcoin?
let's go.
Yeah.
So we're a part of the Bitcoin network, and so Bitcoin, like I'm not fully convinced that these are the only 3 properties of what is important to a blockchain, and I think the definitions of each one encapsulates other things. Like decentralization is not only how resistant is it to being shut down, but it might also encapsulate things like how resistant is it to censorship and other things. Bitcoin has a very sort of intelligent approach to things like scalability. So we tend to try and do things off-chain, do things off the blockchain, and you can sort of link them back into the blockchain if you want to get that sort of finality and certainty. So yeah, that's the blockchain trilemma. So often shitcoins will make very big trade-offs, very bad trade-offs that aren't immediately apparent, and they will really burn in the long run.
Yeah, excellent. Piers, I'm going to go to you next. I want to ask you a couple of questions. One, I've got to get you to, there was a really great story you told offline when we were chatting about blockchains being a terrible choice for a database. So give us that if you can. But also, I want you to riff a little bit on this idea of some of the plausibility that the Web3 folk have, and maybe how that is, why I guess in concept it's sort of reasonable, why it's flawed with what they're doing, and how perhaps that even could be adapted to the Bitcoin blockchain.
So my name's Piers, and I got my apprenticeship learning how to mine Bitcoin, and then helping other people learn how to mine. And I actually run a data center that's Bitcoin focused in Brisbane. Believe it or not, we're actually mining in the middle of the CBD on grid power. Through a bear market. But to answer your question, I think one of the things that is the most dangerous out there is not the monkey coin or the doggy coins, because I think most rational, sane, non-gambling centric people already know that those are a scam and are just playing musical chairs or betting on Farlap. But what's I think a lot more dangerous is the types of chains that sucked someone like me in. And in my early days, I started playing with mining Ethereum on GPU units. And the temptation to go down that path is because when you looked at the numbers, it was actually better to own GPU rigs than it was to own ASIC rigs if all you looked at was a spreadsheet and you projected today's numbers out to infinity. Note to self, don't do that again. There's this thing called risk. And one thing you discovered if you're an Ethereum miner is someone else can make a decision that changes the rules literally overnight or whenever they feel like it.
Doesn't have Bitcoin's immutable monetary policy.
Correct. So not only can they decide how many coins there might be tomorrow, but they can also choose to not allow you to unstake them, or that they no longer want to mine, and it matters only how many coins you have, yes. Rather than what work you're doing for the network. So that was one dangerous project that was reasonably plausible in what it was offering. Another one that I got sucked into because it seemed also very analogous to how Bitcoin worked. Bitcoin works on proof of work. You are delivering some kind of value to the network. Helium, I know I'm going to cop flack for this one. Helium is a system supposedly based on something called proof of coverage. Now, Helium is a mechanism for you to set up kind of like a global mesh network for a very low bandwidth form of Wi-Fi. Of course, what really mattered in Ethereum, in Helium, is the number of physical locations you had control over to put one of these Helium mines, which essentially involves a small box that looks like a router plus an antenna. And by just turning it on, you'd get coins. And then, of course, you wake up one day and that's no longer how it works. You need to have this thing called a validator now. But you only can get a validator if you have 10,000 Helium coins. And then oh no, we're no longer going to use validators, we're going to use something called Solana. Oh, and by the way, we're going to split the coin into 2 different coins. So you never knew when you wake up the next day what it is you're actually mining and what it is you're contributing. And by the way, no one's actually using the network. The only people on the network are people like me hoping to make these helium coins.
I'll jump in. I'm devil's advocate. Why can't I do that with Bitcoin?
Exactly. Why do you need a token? I mean, all currencies, essentially all of us really want the hardest possible money. Now, if we hadn't heard about Bitcoin and I offered you the choice between owning some Venezuelan pesos or bolivars or some US dollars or even Australian dollars, I know which one you'd probably pick. So why would I have helium coins? Really, I just want to move them into the stronger money, the money that's more useful to me.
Actually, you've just led us very neatly, a lovely segue to what I want to ask you about, JP, which is this concept of shelling points. I think it's also fair to say that Bitcoin today, I mean, in terms of how it operates, it's always doing what it's done, but it is a different proposition today by virtue of things like a shelling point, by virtue of things like a network effect, by the fact that it's actually at a point now which is virtually impossible to disrupt. So there's some pretty deep concepts in that. But JP, explain to us what a shelling point is. Why is it relevant to this discussion?
If you've got a situation, as we do now, there's something like tens of thousands of altcoins. And I'll tell you what, so what is a shelling point? I think this room is probably mostly familiar with that concept, but for those that aren't, imagine that you're having to meet someone in a particular world city, let's say New York, and you don't get to communicate with that other person where you're going to meet and when. So both of you have to kind of essentially arrive at the same conclusion by trying to preempt what the other person might think of. So therefore, you're not going to sort of randomly choose some, obscure street corner on the edge of the city at some, at 3:15 p.m. or something like that. Both parties would tend to gravitate toward what some special feature of that, which might be something like midday at Town Hall or Grand Central Station, something like that. So that vastly narrows down the number of possible places and times you might meet without ever having communicated between you. Same thing with Bitcoin, in that there's so many tens of thousands of these other coins, but Bitcoin is very special because it was the first one. It stands out in that way. I wanted to pick up as well on another point that Piers made earlier on about another difference between Bitcoin and crypto. You mentioned gambling, and that's a very important thing here as well, because a lot of these other things, they all have their own narratives. They say, oh, the good projects narrative is what I call it. You might have heard that among what we call the shitfluencers. It's a and they say good projects. And really what that is essentially just a red herring, because it doesn't matter what these things claim to do, because no one cares what they do. All the people you ever find, all they care about is what they can buy it for and what they can then sell it to someone else for later on. It literally is a Ponzi scheme in that respect. It's just given that plausible deniability of a good project narrative, a sort of a use case. Bitcoin, on the other hand, now you could accuse Bitcoin of that, except for the fact that it is full of people who are actually using it as their money. They're not buying it just so they can go back to fiat later on. There's millions and millions of people around the world are adopting this as their money now, not just to buy more of some other kind of money, not more of some other coin or more fiat.
Yeah. Oh man, there's so many. The hardest part of this job is staying on track here, because I want to follow up with so much there, and I'm seeing that clock over there. So Ben, tell us about network effects. So I'm from the equities game, and I can tell you that if Buffett calls them moats, competitive advantages. When you see a network effect, buy and sit on it, basically. This was the story of Amazon. This is the story of the social media giants, of Google, etc. But it's extraordinarily relevant when it comes to cryptocurrencies more generally. What's a network effect? Why does it matter?
Sure. Well, I think a key thing to understand when it comes to network effects is Metcalfes Law. And that essentially states that the value of a network is proportional to the square number of users. That essentially means there's a curve, and it's an exponential curve. But
if I've got a telephone and you've got a telephone, and no one's got a telephone, it's great for us.
Yeah, and the more telephones there is, the curve keeps going. With Bitcoin, it's unique because Bitcoin doesn't just have one curve, it's got two. It's got the adoption curve and the asset curve. The adoption curve is an S shape, so it goes up to 8 billion people as the world adopts it, and then it plateaus and flattens out. But the asset curve will have a very different shape. It's a J, so it's an exponential J curve. Essentially, when you apply Metcalfes Law to Bitcoin, theoretically, it can only ever go up at an ever-increasing rate forever, which is quite bizarre. And I guess it would get to a point where we'd have a hyper-Bitcoinized society where everyone is using Bitcoin. It is the sound money standard. And then at that point, fiat currencies will not be relevant, and everything will be continued to be absorbed by Bitcoin. And as Knut has said, everything divided by 21 million will be the reality by the network effect itself. Once that gets set off, it's very hard to stop. And Bitcoin is already a well-known brand around the world, so you can't really put that cat back in the bag. Yeah. And that's the power of network effects.
And this is my point as to why Bitcoin today is a much firmer proposition than it has ever been before. Forget the price and whatever that is done. It's just that we just have that, the network effect is so strong. So it is very, very difficult to disrupt at this point. In 2035, it'll be even more impossible. And then so it's something that what you have to understand compounds and reinforces on itself. And so it's just, I think from a risk, me and Pete Dunworth will talk about this later, but on a risk-adjusted basis, I think for that reason, it's as good a proposition today as it has ever been. Nick, one of the other things we thought we'd touch on in sort of making the contrast with the shitcoins and all the shit fuckery that goes on over there is that, there's some pretty cool stuff, with a world computer, being able to program on various blockchains, but you can actually do a bit of that, right, already? You talked about multi-sig as
Yeah. So Bitcoin technically has smart contracts. Bitcoin has a scripting language where you can program things into it. So multi-signatures is sort of the most common example where you can protect your Bitcoin behind a number of keys. So instead of having one key that protects your Bitcoin, you could have some Bitcoin script which says to spend this Bitcoin you need 3 keys, or you need 3 out of 5 keys, or whatever you really choose. So a lot of blockchains, they try and sell themselves as being programmable money, or as the world computer, which I myself fell for a few years ago, and I think many of us did. I've been more and more convinced, often by Lloyd, that these blockchains, really all they're doing is moving ones and zeros around. Very rarely do they actually provide anything of value. And a really, really interesting example of this recently was Vitalik Buterin, the creator of Ethereum. He posted some of his use cases for Ethereum in the last, I think it was like year or 6 months. And his uses were like, I donated to a charity, that's a payment. I bought plane tickets, that was a payment. And his third one was, it was like a collaborative custody thing, so something you could do on Bitcoin. So it was really interesting to hear from someone who was pioneering the world computer so much that even they themselves didn't have really much of a use for it.
A solution looking for a problem to solve.
Yeah, and a lot of the DeFi stuff as well, like it's really, really clever ways of like packaging money and programming it so that it sounds like it's doing something of value, but often the time it's just you shooting yourself in the foot. There's some really hidden trade-offs. Your money's sort of evaporating while things are happening. It's the programmability of Bitcoin, I think, is really quite an optimal level of you can do things with money with it. You can defend your money. You can protect your money. You can program interesting programs that custody your Bitcoin in an interesting way. And on that, if you do want to do other things, you want to do NFTs or you want to do other programmed things, you can still use Bitcoin for that. You might just not necessarily have to do it on the Bitcoin blockchain. There are many side chains which still use Bitcoin, they still use the hard money, and you can still have all the crazy fun you want with those other things.
Yeah, nice. Oh man, that clock just does not stop ticking. Piers, I think this conversation would not be complete without coming at it from a regulatory standpoint. A lot of the stuff that we saw last year in particular did not end well, and again, Bitcoin has been tainted by that. That has and is provoking a very big regulatory response. Frankly, I think it's a pretty good response for the large, the lion's share of what they're trying to do here. But is this an argument for Bitcoin, not shitcoin? If you were to sort of look at this thing in the way that a regulator might look at it.
Yeah, I'd just like to give a great shout out to Christine Lagarde, recently Hillary Clinton, Augustin Carstens. Fantastic job in the Bitcoin marketing department. Keep going, boys and girls. Look, already Gary Gensler has sort of laid this out for us, and I think Jeff, you on the previous panel already highlighted for us that fundamentally the regulators have understood that Bitcoin's unstoppable. Now, obviously, there's a move afoot right now to seal the exits and the on-ramps. Obviously, act accordingly.
It's like trying to ban a language, though, right?
But look, as I'll show you guys, if you're happy to come to the tutorial I've got after lunch, I can show you how you can basically create your own wallet using dice and a piece of paper. So are we going to ban mathematics, dice, and paper? No, we can't ban it. And then Gary Gensler from the SEC, or the equivalent of our ASIC in the US, has already pretty much laid it out there that Bitcoin is really the only digital asset that he considers to be a commodity, and therefore it passes something called the Howey test, or not passes, depending on which way you view the negative or the positive.
You want to fail it.
You want to fail this Howey test. So it is not a common enterprise. There is not a expectation of profit. It's
no counterparty.
Bitcoin has no board of directors.
CEO, no marketing department.
Yes.
Other than the marketing department we've already outlined, there is no CEO. There's no service that you can take down unless you're able to take all 45,000 of them down. And you're not going to find mine in a hurry. It's from that point of view, it's the most defensible network we've ever had.
Yeah. Oh, gosh. So much to say. 2 minutes on the clock. So, guys, you each get 30 seconds. JP, start us off. Closing thoughts.
Sure. Look, again, just on that point, that is another unique thing about Bitcoin, and I think it's something that I know that helped a lot of people understand the difference, in that there is literally no CEO, there's no corporation behind it, there's no marketing department. To the extent that there is a marketing department, it's all of us. That's it. It's all of us, and and we don't have any. None of us is any more important than any other in that respect. And as for, again, CEOs, pre-mines, all of that, none of it's there. It's the equivalent of like the internet itself. It's just a neutral thing now. Bitcoin, it always has been. It's like a protocol now. You can now do money in that way without the need for any of these other hierarchical structures around it.
Nice.
We've done the work for you. Don't shitcoin.
Bitcoin is the signal, and crypto is the noise. Focus on the signal.
Thanks for listening. And if you want to check out like exciting, programmable money, there's heaps of stuff being built on Bitcoin. There's all these, decentralized trading derivatives, there's NFTs, there's heaps of stuff being built on Bitcoin, more than enough built on hard money. So I really don't see very much reason to check out much else. And even if you do, I think you'll be coming back in a few years very sorry.
Guys, thank you. Give them a hand. Come chat to us afterwards.